Good morning, everybody. Very excited to have you here this morning, joining us for our 7th annual 2020 Audit Committee Summit. This is our first virtual summit, but we've worked very hard to bring you the best experience possible. This is obviously a very exciting event for us as a university. The Paul Merage School of Business is a leading hub for intellectual collectivity and learning, and one of the many objectives that we have is facilitating discussions such as today's prominent seminar with practitioners and regulators and leading experts in the accounting and business community. And so we are extremely excited to have very distinguished speakers with us here today and a very robust program, and I am going to share that agenda with you in a moment. But I would first and foremost like to make sure and acknowledge and thank our conference sponsor, whom without their support, especially this year, is obviously we've had to all work through challenges and pivot to what we are now obviously engaging in for most of us, which is a remote setting for most of these type of events. So I want to begin thanking our founding sponsors, the Forum for Corporate Directors and the Corporate Directors Roundtable of Orange County, our conference partners, our founding sponsors, Square Milner, a large regional CPA firm based here in Southern California, Paul Hastings, a highly regarded international law firm. We are also equally grateful for the support and contribution of our gold and silver sponsors, who are recognized worldwide and have done so much to make this event possible. Our gold sponsors, Deloitte, Ernst & Young, KPMG, and O'Melveny & Myers. Our silver sponsors, PricewaterhouseCoopers, C&M, and Woodruff Sawyer. Please join me from your homes in thanking all of them for making this conference a reality. I am Dr. Patricia Wellmeyer. I'm the Academic Director of the Masters in Professional Accountancy here at UCI Merage. I'm also a Clinical Assistant Professor in the area of accounting. We are now going to quickly jump into the lineup for this morning's event. The conference agenda is going to begin with a keynote fireside chat, which I will moderate with our distinguished keynote speakers. We will have about 50 minutes of discussion that is moderated by myself. And following, we will have a 7-minute to 10-minute Q&A for the keynote fireside chat, followed by a break of approximately 7 minutes. At the end of the break, we will come back live with a very robust panel discussion on Audit Committee hot topics. We have Steve Cook, who's a partner from Paul Hastings, joining us once again as moderator, and he has a great set of questions and the lineup of speakers, which will include our keynote speakers. So definitely stick around for that, because it should be a very exciting panel and certainly an informative one. Before we actually jump into our keynote fireside chat, what I wanted to run over with you are some important housekeeping items, specifically related to CPE credit, but also, very importantly, your mechanism for being engaged with us throughout the summit today. And that is through the Q&A portion, submitting your questions through slido.com. So I'll go over those instructions in a moment, but beginning with the CPE, this year we've made it extremely easy for you. If you are interested in getting your 2 hours of CPE credit for this morning's event, all you simply have to do is email Lori Williams at Square Milner. Her email is on the slides, as you see there. Just please do in the subject line include the UCI Audit Committee Summit 2020 as the main subject for receiving the CPE credit. And of course, include your name if it's not anywhere in the email. To interact with us today through the Q&A, and I really do hope that you engage and use this time as a very important time to reach out to our regulators and hear from our experts. So please do join in by asking questions. You do so by going to slido.com on your browser. Once you are on the slido.com screen, you will enter the event code, which is 79724, and you will simply just click on the join button and type a question at any point in time. As I mentioned, the Q&A portion will happen at the end for the keynote fireside chat at the end of our moderated discussion. I will be alerting you once again to when that will happen so that you are able to, if you haven't yet submitted a question, and be heard live here today by our panelists. All right, without further ado, I would actually now like to introduce our distinguished speakers who will be joining us for today's keynote discussion. We are extremely privileged to have them here this morning. And I am obviously, as the moderator, but certainly on behalf of the Audit Committee Summit 2020 and our sponsors, extremely grateful for them sharing their time and their insights with us today. So joining us from the SEC's Office of the Chief Accountant, we have the Chief Accountant himself, Sagar Teoshia. Sagar was named the Commission's Chief Accountant in July 2019. Prior to his appointment as Chief Accountant, Sagar was a professional fellow in the OCA and previously a partner at Deloitte in the national office. Welcome, Sagar.
Thanks.
Joining us from the PCAOB is PCAOB board member Rebecca Goshorn-Jurata. Rebecca was sworn in as a board member of the PCAOB on November 4th, 2019. Before joining the PCAOB, board member Rebecca served as a special assistant to the president for financial policy and was responsible for advising the president and the National Economic Council director on an array of financial services matters. So welcome, both of you. Very excited to hear from you in a moment. What I thought I would give you a chance to do first is I'm sure there's some disclaimers that you want to get out of the way. So why don't we go ahead and do that?
You want to go, Rebecca, or you want me to? Either way.
Sure, I'm happy to go. First of all, thank you, Patricia, for the kind introduction. And I'll just truncate our disclaimer to saying these views are my own and not that of my fellow board members or that of the PCAOB. But it's a privilege to be here, so thank you. Thank you for having me as well. Excited to be here as well. I speak for myself today. I don't speak for the commission, any other commissioners, or any other staff at the commission. So plain English, these are my words today.
Perfect. Okay, so the way that I thought we would structure this morning's fireside chat is we'd start with a broad overview of the OCA activities and the PCAOB strategic plan, which was adopted in 2019 and has been continuing its important work. And then moving on to more specific issues such as COVID and standard setting, implementation, and a little bit of looking forward as much as we can, of course, because these days, day by day, we never know what's going to happen, right? But a little bit of looking forward towards the end. All right, so I'm going to start with you, Sagar. As we all know, the Office of the Chief Accountant plays an extremely important role in support of the financial reporting system through a wide range of activities, both domestically and internationally. Can you share with our audience what those key activities are and what the office's current areas of focus are?
Yeah, Patricia, of course. And I think this will be a good setup for kind of as we get deeper into different areas. And so, as you point out, we're thrilled to have such a privilege to do so many different things. And
It's a focus that's international, but also we're very focused on kind of our domestic agenda as well. And so I'll take you through that. But basically, we're structured in 4 different groups. So we have our accounting group, which helps the commission oversee the FASB. So not a day goes by where that group isn't working with the FASB, whether it's getting detailed on exposure drafts, or talking to the FASB about potentially the agenda, dealing with the board, dealing with Rich Jones, of course. Obviously, we deal with, as an office, with the FAF trustees. So Kathy Casey is the chair of the FAF trustees. So we work kind of through the FASB on that side. And then that group also handles what I suspect many in the audience have done, or companies have done, is write in when there's a challenging accounting consultation. So these can be different issues where it's a hard question, the facts are hard, you're trying to apply the literature, you want to make sure you're getting it right. We have a long-standing pre-clearance consultation process. We've got a lot of questions on this. We, of course, got a lot of questions related to the new accounting standards that no doubt we'll talk more about today. So the folks here have very deep expertise in different accounting areas, and so they're the ones who kind of handle those questions. And then, and you'll see in those questions, we actually ask what the audit committee thinks, and that's a really important checkpoint for us because we really do want to know that. And so that's kind of the accounting group and what they handle. They're very capably led by John Van Osdell, who's our deputy over the accounting side. I'll pivot to our professional practices group. So this is the group where this group works with Rebecca's organization. So the group is responsible for helping the commission oversee the PCOB. So similar, if the PCOB is thinking about a spotlight, they're thinking about standard setting, or different ways they're meeting their strategic plan, or different discussions on matters. We have a very great back and forth with the PCOB. Our organizations work very closely together, and we're really guided by enhancing audit quality. And we've got a lot of folks who know audit very well and get a chance to work very closely with Rebecca's group. That side of the house also deals with auditor independence. And so on auditor independence, I think when people think about us, they think about all the accounting consultations we get.
Yeah.
We also get a lot of auditor independence consultations, and we're just privileged to have some folks who follow that, have known that very well. And so certainly as we get into that, I'll mention that as well. And then another thing that's near and dear to OCA's heart and investor protection is ICFR. So ICFR questions kind of come through, and that group deals with that. Again, we're thrilled to have Diana Stoltzfus, who leads that group and has joined us. I'll pivot to international side of the house. So Paul Munter leads the group. This is really where we kind of pull it all together, I think, where we spend a lot of time on different areas where the SEC can have an impact. So monitoring groups. So if you think international audit and ethics standard setting, IAASB, IASBA. So basically the monitoring group oversees the PIOB, which then oversees these two groups. So in plain English, the folks kind of interacting with the international standard setting. I'm privileged to be the co-chair with Ana Martinez of that. Our international group spends a lot of time on that. We're going to talk more, of course, on that. Monitoring board, the SEC has a seat that helps us oversee IASB. So obviously that's a critical function. And then there's not a day that goes by where we're not dealing with somebody internationally, whether it's another regulator. Different countries are going through very different experiences right now in different areas. And it's good to have a good connection, and that really helps inform, how we think about things domestically, and we're able to share kind of domestically on an international level. And I'll give you examples as we get into more areas. And then finally, we have our chief counsel, Natasha Gwinnen. We're absolutely delighted to have Natasha. Natasha previously, a while ago, worked at the PCOB, and then she worked in our general counsel's group. And so that group deals with enforcement consultations. That group deals with rulemakings that OCA gets involved with, and really within the commission, it's I would say, my numbers might not be right, which is good for my caveat, maybe 70% lawyers. And so if you don't have a good chief counsel, it's going to be hard. And so we're thrilled to death that we've got a great one. So a lot of the blocking and tackling of the commission runs through chief counsel offices across the building. So in my mind, in many ways, they're kind of the unsung heroes of our office. The other groups people deal with very much. And so as I kind of step back, that's how we're organized, and that kind of informs kind of the different things we want to hit on and focus on, and we'll get deeper on that. And then the only other thing I'd offer
is just as it's critical for each of those folks to be working with their different groups. For us internally, particularly in a COVID environment, the way we interact both with the commission, with the chair, and also other divisions and offices is central. The commission has so much expertise, and there's so many areas we deal with, and I'm really proud of the relationships we have with other divisions and offices. I think you can see it in how we state infrequently statements come from several of us. That's not accidental. That's intended to message that we're going to talk about COVID-19. But if you look at our COVID-19 webpage, very proud to see all the different divisions and offices and the impact. And so another thing probably people don't think about a lot, but internally it's absolutely critical for us to accomplish what we want and the way we interact with others. And so that at a high level, Patricia, is kind of how we're structured, what's important to us. And I look forward to getting into more detail as we keep going.
Yeah, now in a moment. Thank you for that, Sagar. I'd like to give Rebecca a chance to also talk about what the PCAOB has been doing in terms of the strategic plan and what progress you've made, Rebecca.
Yeah, no, absolutely. Thank you. And I forgot to also mention how it's a real pleasure to be here as an alum of a UC school, both for undergrad and grad. So although I went to UC San Diego, but it's all in the family. And so as Sagar indicated, we obviously have a close working relationship with the SEC as there are in our oversight function. But we as a board, we did a significant analysis and review of the functioning and the operation of the organization a couple of years ago. The PCAOB, as many of you know, was created as a result of Sarbanes-Oxley and came into existence in 2003, but there had not been a holistic review or internal dissection of where there was room for improvement in the operation. But we think that the PCAOB, serves a critical function in promoting audit quality. And as such, when the board turned over, it was an opportunity to evaluate what a 5-year strategic plan would look like in transforming the organization. And so in 2018, it was the first time where a 5-year plan with a significant number of initiatives were identified. And then as you indicated, Patricia, I was appointed into the board last year. And so it was actually the first vote that I got to participate on as a board member was reaffirming that 5-year strategic plan in 2019, where we as reaffirmed it, and we're continuing to move forward with the work. And we have been doing a lot, even in the COVID environment. To date, we have accomplished, we would say, around 40 of the key initiatives that have been previously identified, with focusing our prioritization on improving the oversight function of the PCAOB and enhancing our engagement with stakeholders. So with respect to our inspection program or enhancing our oversight program, we've done that in a couple of ways. The first is improving our inspection program by moving towards a single inspection manual. It gets a little wonky, but we think that was really important from a consistency standpoint. The second was in communicating what the results of our inspections program are by enhancing our reporting mechanism. So as many of you have seen, is that our new inspection reports were issued earlier this year, and it was a significant departure from how we previously were doing our reports. And in fact, it was the first time that the PCAOB changed the manner and the format of reporting out our inspection reports since the creation of the organization. And the other, and with respect to enhancing our outreach with stakeholders, was in particular with respect to audit committees, and not just with respect to the auditing profession, as well as preparers and investors. We even created an Office of External Affairs to indicate how critically important we think establishing those relationships are. And in the year of 2019, the PCAOB actually reached out to almost 400 audit committees whose audits were actually subject to a review of the PCAOB inspection program in order to establish that relationship. And to get to feedback loop, right, of, well, what are you seeing with respect to on the audit committee side from when you're engaging with your auditors? What more would you like to know from us? And in light of the COVID pandemic, it's really been critically important that we've actually established those bridges of communication, because since we've all transitioned to a remote environment, we've actually, relied upon all of those relationships. And And I also think what's been really important is that we recognize that the auditors are subject to our oversight and that we regulate them heavily, but it's also important to have a monitoring relationship with them as well, so that you have the open lines of communication so that we can hear in real time issues and address them. And so I think that we're moving forward. It's an iterative process. We still have a lot more to do, but I'm pleased with the progress we've done to date.
Sounds great. And in fact, talking about COVID and the challenges that has created, and absolutely, I mean, the fact that you already have those lines of communication set up, I'm sure at least made the challenges a little bit easier to work through. But I'd like to now turn to the conversation of COVID-19 related issues and start with Sagar. Sagar, can you please share your thoughts on some of the challenges and perhaps resilience that you've seen in the financial reporting system, and perhaps what you've seen faced, but also, again, the resilience that you've seen shown by our reporters due to COVID-19?
Yeah, no, of course. It's obviously an ongoing area of focus. And so as I kind of rewind back to March, April, obviously so many things happened very quickly. What we were very pleased with was we have a high level of engagement externally, internally. And so, as these things were happening, we were talking to lots of people. We were getting lots of consultations as you were kind of thinking about different accounting issues. We were working with different people in a proactive manner to make sure we were trying to, help as many people as possible. We got lots of consultation inflow. And then I think our chairman said it best, is the markets clearly thirst for high quality information, right? We have the gold standard here in the United States, is what Jay has said over and over. And it's true, as we do all this international work, we see that, and we're very fortunate to have that. And so, obviously we had Q1 come on upon us, and from OCA's perspective, we issued statements both in Q1 and in Q2, and we'll go into those beforehand about kind of our expectations, our engagement, our different areas where we were trying to meet this investor goal of getting investors the highest quality information. But also engaging with everybody, understanding that, this is a novel pandemic that, people are dealing with, preparers, auditors, regulators, et cetera. So, that's how we kind of dealt with it internally. We had countless meetings amongst the different divisions and offices kind of saying, hey, what are you seeing? What are you hearing? We created the COVID-19 webpage that I mentioned earlier. And I literally remember when there was nothing on that page. And if you go now, and I encourage everybody to go, it's really an amazing collection of contribution from so many different people in the building. You can see just the breadth of the building and the breadth of the issues that were faced and the different things that people did. And we're pleased that we did our piece. And so, kind of in Q1, people were able to get their filings. We offered at Q1 kind of an extra 45 days if people needed extra time. Given the circumstances, but also we're very clear that look, these have to be in compliance with GAAP. They have to go through, as the auditing process goes through, they have to meet the auditing standards, and transparent disclosures are what investors most thirst for, right? And so that was the emphasis, and obviously our level of engagement, interacting with people, and then offering kind of that time. I think got investors to a really good place in Q1. I remember when filings went in Q1, and it felt like there was like a calm. It was kind of a reminder of just how critical our shared profession is, and how people can step up and have stepped up. There's always challenges in accounting. If you look at the last 20 years, there's not a minute where there's not. I mean, that's why it truly is an amazing profession. And then, in Q2, we continued all that extensive work, dialogue, answering hard questions, working with people, and because of the hard work of preparers and auditors, and really kind of an investor focus, we were able to do exactly what we did in Q1, except not need the extra 45 days. So people were able to get everything that they get in a timely manner, which was really substantive and really terrific. And so we've moved through there. As you know,
As you both know, June 30th, some folks are year end, so audits have gone on, right? So it's not just all calendar year end, right? So, and then 9/30, right? Folks are starting that audit that process as well. So people are kind of getting through things, which I think is a terrific outcome. And then maybe just the way I think we kind of closed it off internationally was, if you look at IOSCO, which is think Chairman Klain, think 70 of his equivalents around the world, maybe 70 something, right, 75 something, but a broad group. IOSCO, rightfully so, wanted to come out with a statement on what they think about this. And so we're privileged in our office to be the co-chair of C1, which is really their accounting committee and auditing committee. Mm-hmm. And if you look at the statement they did, I would say it's 90 to 95% identical to, not identical, but same points that we were hitting. I'm sure Rebecca will tell you about the great work they did in terms of their communications. And to get to that number from an international basis was just really a really good outcome. And so on a global basis, right, you can see kind of what investors are getting on that level. And so that, Patricia, at a high level is kind of how we tackled COVID and dealt with the challenges.
Okay, and we certainly will see more of those challenges a little bit later on. But I would like to turn to Rebecca for a moment. And obviously, auditors have shown their share of resilience, and they have obviously experienced challenges through the COVID-19 situation. But can you share your thoughts with us on some of the challenges auditors have faced, and what activities the PCAOB is engaging in as a result that you think audit committee should be aware of?
Yeah, no, absolutely. So I think as the auditing profession went to remote work from home, they face some of the similar challenges that many of us do, from, maintaining the health and safety of their employees, issues with respect to childcare and elder care. But then unique to the auditing profession is, as Sagar indicated, is that they were still doing their job. And the fact that they were now working remotely, they can't be on site with their client. And so as a result, we expect that some of the auditing procedures that were typically relied upon in previous years had to be modified to address the challenges that are facing in the remote environment. I mean, I think it's also worth noting, though, as the SEC provided some targeted relief, what we did at the PCAOB was that we didn't actually provide any regulatory relief with respect to what auditors were required to do under standards, because we thought it was really critically important that in order to continue to promote audit quality and protect investors, that we would not actually facilitate a limited scope audit. And so the relief that we did provide in the beginning stages of the pandemic was with respect to our inspections program. And so we offered a 45-day delay from basically beginning the inspection cycle. So depending on the size and complexity of the firm, there was a hybrid in response. But again, it didn't stop our inspections program, and it didn't limit what we did with respect to the 2020 inspections plan, but it provided some relief. So those auditors who were still doing the work and facilitating moving to the remote environment, if they needed a little bit of relief so that they didn't have to do their day job as well as continue with our inspections program, they had that opportunity. The other thing with respect to the PCAOB that we did is actually moving forward to the remote inspections program was trying to move forward as quickly as possible. Obviously, in light of the prohibition on international travel, our international inspections program had to be halted in the beginning. And recently, though, we have begun to move forward with bringing back our international inspections program. It's done in close coordination with our fellow international regulators, and I think that there's a recognition that this is the new normal, and so we need to have a plan to move forward. I do believe that a lot of the auditing professions who are professionals and firms that are registered with us are doing everything in their power to actually facilitate our inspections program, because they too recognize how important it is. I do think that I had indicated in my previous answer that as part of our changing our oversight function of the PCAOB, one area that we did prior to COVID was the creation of what we call target teams. And so when our inspections program identifies a particular auditing firm where they want to go in and evaluate an issuer, there can be times where a specific target team looks at issues across firms and across industries. So prior to COVID, one of the areas that we thought would be interesting for cross, comparison purposes was multi-location audits, for example. And what we did was we pivoted our 2020 inspection plan in light of COVID to include audits of year-end of June 30th, so that we could see quickly this year, rather than waiting until the next year's inspection cycle, what is some of the impact on the auditing firms and their audits in response to COVID. And we also, which we haven't done previously, is facilitated interim reviews. And so again, this is actually to try to facilitate our inspections program of looking at some of the immediate results of the pandemic. And again, I think in taking a step back, we've also continued to do a lot of ongoing communication because we want to make sure that we are being responsive. But we did have a lot of conversation and discussion at the board about what, if anything, we can and should do. But what we ultimately decided, and I think it was the right result, was that we're holding other auditors to the same standards that they've always had to comply with. And we just recognize that some of their work is going to have to change, and we'll have to, and we're trying to provide as much guidance as possible, which is why we actually have issued a number of spotlights since the start of the pandemic.
Right. So actually, Rebecca, let's focus on one of those changes, which is not necessarily a new change, but certainly I imagine, these are my words, that perhaps the implementation of those changes relative to technology and the use of data has been a little bit accelerated here through the COVID-19 situation. But can you talk to us a little bit about what changes you've seen in the use of data and technology before I turn over to Sagar?
Yes, no, I'd be happy to. And I think that one of the positives, if you could try to find some silver linings during a global pandemic, is the fact that it's actually encouraged and facilitated more of a rapid adoption of technology, both by auditing firms as well as at the PCAOB. We've reprioritized some of our deployment and as with respect to auditing firms and their relationship with their clients, and so the issuers. And we've seen that technology play a crucial role, in particular with the communication between auditors and their clients, as well as the data that's being provided between the two. And so, as many of you know, some of the auditors were still receiving some of the data in paper format, which you can't really facilitate in today's environment. And so as we move forward to the digital era and facilitating data in large data dumps, we think that it actually is going to facilitate greater data analytics as auditing firms are doing more robust testing, which is probably important during this time. At the PCAOB, we've continued to analyze the impact of, or not the impact, but the relationship basically between our standards and the use of technology and data. We previously had stood up a data and technology task force that existed prior to COVID. We actually issued a statement earlier this summer on some of the results that we've seen. So as of right now, to date, we believe at the board that there's actually nothing in our standards that precludes the ability to use enhanced data and technology to be compliant with our audit. But from a personal standpoint, I'd like us to do more. There's obviously a fundamental difference between nothing precluding the use of data and technology in your audit and also facilitating and encouraging. But we also think that because of the adoption and facilitating enhanced communication, notwithstanding the move to remote environments so quickly, overall, we've been pleased in hearing directly from auditing committees as well as with auditors that they did it pretty seamlessly.
Great. And actually, that leads me to a good segue to turn to Sagar in terms of outreach with audit committees and stakeholders. And you mentioned, Sagar, a little bit about the OCA's involvement in accounting consultations, and that being one of the ways in which stakeholders engage with OCA. So what I was hoping to do before we wrap up the discussion on COVID is to have you perhaps describe that process, the consultation process, a bit more, what audit committees should know about that process, and then perhaps if you could shed light and share your thoughts on the types of topics and natures of questions that you've been dealing with in general, and specifically with COVID.
Yeah, no, of course. In terms of the process, as I kind of mentioned a little bit earlier, so if you find yourself, in a challenging situation, which could be a challenging transaction, could be dealing with, interpretations of accounting standards. There could be a whole host of things. You're entering into a new financing arrangement, right? You have a preferred stock agreement, and it's got complicated calls and puts and conversion features or what have you, right? There could be countless things, right? We all know how complicated companies and businesses and so forth, and so. One of the things that people do is do a consultation with us, and we've got on our website, it kind of laid out what we want, and so it's basically what you would think. It's all of the facts, the different accounting literature that potentially could be in play, the different accounting alternatives you considered, why you believe you picked X, and why you think X is in compliance, of course, with GAAP. And then after that, there's a couple key parts, right? So one requirement, and we won't answer the question without getting both of these. One is, what does the audit committee think? And that's intended to make sure that, there's transparent conversation amongst the company, auditor, with the audit committee on this matter. Audit committee, has a point of view on it, and so we asked for a paragraph, right, and so we get to know what the audit committee thinks. So that's really helpful, and then obviously we want to know what the auditor thinks, and so very often these run through the auditor's national offices, and so we'll also want to know if it went through the national office and what the national office thinks, and then we have what you would expect we could have. Then we have a document, right, that is sufficient to allow us to read, and then typically we'll have a call or two, go through the issues. Depends on complexity and so forth and the quality of the submission, right? But it could be more than that, and so forth. And then we're able to answer the question. And so we'll either object, saying we don't agree, or we'll not object, in which case we don't object, and so forth. And so that's kind of the process at a very high level. In terms of types of questions we've been getting, in the COVID environment, I'd say big picture, we're still getting a lot of quote unquote COVID questions. We're still also getting a lot of normal questions, which is good. I think that's really healthy. Like, if we weren't getting any, let's say, accounting acquirer questions, we would find that odd, right? Because there's clearly M&A transactions happening. It's always been a big source of accounting consultation, right? Because it can be a challenging area. And so we are still getting kind of a lot of the bread and butter consultations, I'll say, where we generally get a lot of business combination consultations. We get a lot of consolidation consultations. We get consultations on derivatives for different reasons. And then in terms of COVID-19, we continue to stay engaged, understand what people are seeing. Obviously, the flow of what we saw in Q1, Q2 was really, really high. As I mentioned, naturally, right, we were getting questions on impairment, going concern, basically kind of looking at your balance sheet, leasing, stock comp. It really spanned, a whole host of areas as people were kind of working through that, many of which we put in our statements. So in Q1, we put in kind of the topics we were seeing. In Q2, we did as well. We included some discussion on going concern that I know we're going to talk about a little bit later. And so that's probably kind of both the process side and then the types of questions we're getting at a high level. And obviously we'll continue to stay engaged and see what other questions come through. And then from time to time, we will give speeches, on specific fact patterns that we think are helpful for people. We'll post those. We want to be transparent on our website. So people can see, okay, this is what the staff objected to, this is what the staff didn't object to, and can kind of understand and so forth. And so, obviously at the right time, we'll consider doing that and so forth. So that at a high level, I think, is what we're seeing and how the process works.
Okay, thank you. I'd like to now turn the conversation over to talk a little bit about standard setting and implementation. There's obviously been a lot of activity both on the FASB side, but certainly on the PCAOB side with standards being adopted and implemented. or going to be implemented beginning the end of this fiscal year. So I'm going to start with Rebecca first, and then I will pivot to Sarah to talk a little bit about the FASB. But Rebecca, a couple of the new standards that will become effective this year are those on auditing estimates and the use of specialists. What do you think audit committees should know about the implementation of these new standards, and what are your thoughts on those?
Well, I think the first is that they go effective for year-end audits of December 15th or later. So first and foremost, and so the other thing to take a note is, all joking aside, is that means that the work that we expect our auditors to do with respect to evaluations of estimates this year should be significantly different than prior years. When we were adopting the standard, it was done in response to the fact that, notwithstanding that restatements were at historic levels of low, we continue to see deficiencies in our inspections program and the work that auditors were doing in evaluating estimates. And so as we move forward with the implementation of this, I think it's just worth noting that the new requirement is basically, it's a risk-based approach, and that we expect our auditors to exercise professional skepticism in evaluating the effectiveness of what management's doing in response to how they're evaluating their estimates. And in light of COVID-19, I think, this is actually going to be a dynamic area, because the underlying assumptions that management may be relying on it might impact the risk assessments that auditors are using and how they do it. So I think with respect to, what auditing committees should know is that the work that we expect auditors to do under the new standard is probably enhanced and greater than in previous years, and that communication may have to actually increase as a result. And it's similar with respect to the use of specialists. And, as Sagar just sort of indicated in, the valuations, it depends on the industry what their use of specialists is. Is it the company? Is it the auditor themselves? But we at the PCOB thought that there needed to be more oversight in how you do it, as well as testing the work that you can actually rely upon. And so the actual overall impact, or how much work is going to change in light of the new requirements, will obviously depend on the facts and circumstances of the underlying client of the auditor, as well as any direct impact because of the pandemic. We do recognize that it's actually a complex area, which is why we've been issuing guidance and trying to help facilitate some of the interpretation. And then I would just, encourage anybody who has any additional outstanding questions to reach out so that we can help address them.
Okay, perfect. And I'll circle back with you in a moment, because I do want to talk about the new auditor reporting model, CAM, specifically. But I would like to first turn it to Sagar to talk a little bit about the FASB. You spoke about how OCA assists the Commission in its oversight of the FASB. Can you talk to us a little bit about what OCA does to assist the Commission in its oversight, and any thoughts you can share on the current standard setting agenda of the FASB? We know they've been very busy.
They have, and they've done a lot of work that's really helped investors, right? So I think the revenue leasing credit law standard is brought about a lot of transparent information for investors. The disclosure packages are really, really good. You get nature, timing, cash flows for revenue leases, et cetera. And so they've certainly been busy, and I'll get to that in a second with the agenda. But so yeah, it's obviously a very important focus. And so I'll start at the top. We as I mentioned, we work closely with the FAF trustees and the FAF chair on different areas that they're working on in their oversight of the FASB. And then right in the heart of the pandemic, right, they had a major transition, right? June 30th, Russ Golden, who's the chair, his term was over, and then Rich Jones stepped in, and that transition was managed very, very well. And so kudos to the FAF for that transition. Rich has gone out there and is engaged, is talking to folks, and is doing all the things that make sense for a new chairman, things domestically and then things internationally. So obviously, from a top level, we monitor that. We're interacting with Rich, we're interacting with the board, we're interacting with the technical director, and then kind of making sure those pieces kind of fit in. And then our teams are working closely together as they work through different standards to make sure we give them our comments. And then we have a vibrant discussion in terms of, the standard setting process, which is really, really healthy. In terms of their agenda, I think they're mindful, and they should be, and we've told them they should be, of just the point you made that, 3 very large standards went through. But they've also spot on in terms of, look, we have to constantly be providing investors with high quality information. If there's areas where we can enhance things, and that makes sense, they need to have those on the agenda. So it's of course a balance, right? And everybody will tell you their view is the right view, what they should do and what they want to do. But I think they're guided by the right principles of, okay, what makes the most sense for investors? Where is accounting? Where can accounting be improved, right? And think about the breadth of transaction that accounting covers. Of course, there's areas that are going to make sense. I think they're also cognizant of the time folks spent. And so I think Rich has a good balance. And so I think their agenda from our perspective is kind of right where it should be in terms of it's got a lot of really good areas that they're working on, reflective of, I think, real things that have happened. Also, it's something that they're constantly looking at and what should be added, what maybe doesn't make sense and so forth. And so, they'll continue to do that. And then everything they have on there, obviously we're going to work closely with them, and our team will work closely with them on that. We also, obviously, with all the international work we do, we have a very close lens on what the IASB is doing. And so we're able to offer up perspectives on that both ways. And so, of course, it's helpful to kind of see both. And obviously, are supportive of the FASB and want them to meet their mission as much as possible. So that at a high level is kind of how we attack that piece of the equation.
Okay, great. We'll get some time towards the end. We are running a little bit late because I do want to give the audience time to speak, but maybe we'll get a chance to talk a little bit more about the international engagement that the OCA has taken part of. But first, I want to cover a couple more things on standard setting. Obviously, the new auditor reporting model and CAM requirements. Now we've seen some of that implementation come and trickle in. And from the academic standpoint, I can tell you there's a lot of people working on this topic. But what I want to hear from you is, Rebecca, is what have you heard about the usefulness of CAMs?
So our Office of Economic and Risk Analysis is currently undertaking an evaluation with respect to the usefulness of CAMs. And it's basically, the results are that it's early days. But to facilitate the review, ERA, as we call them, issued targeted surveys to investors, to preparers, to audit committees, to auditors, and to ask their opinion of how useful are CAMs and what are they basically seeing. So with respect to investors, typically investors like to see comparable data. And because it's just got rolled out, they can evaluate or compare how CAMs have been done historically versus now. So I think we'll continue to do some outreach with investors directly on this issue. But what you also hear is, with respect to investors, they always like more information. So we want to make sure the information is useful and it's not just more. And so I think that as we continue to evaluate it, we hope we're actually planning to issuing another follow-up, hopefully by the end of the year, of what we're seeing and the effectiveness of CAMs. What we're hearing from preparers is that it's basically a neutral position, was that there was no real impact on the preparation of the financial reports. And then as far as auditors, what they're saying is obviously the work required to comply with the standard increased, but that there was a number of auditors that engaged in dry runs with their clients. And so that facilitate, an ease of actually moving forward for the new requirement. I think anecdotally, what we're seeing is that I think that they're useful. We're tracking all of the audit reports that have been coming out, obviously, since the pandemic, and we're seeing a number of the audit reports that specifically reference COVID-19, and then there's a subset where a number have, in those CAMs, actually also identify the relevant factors COVID-19. So, for example, a CAM with respect to going concern. So we think that that's kind of in itself examples of the usefulness. But again, it's early stages, and as we continue to evaluate it, we'll see what more, if anything, that needs to be done with respect to guidance, and we hope to get the results from ERA issued in the coming months.
Okay, perfect. I'm going to stay with you real quick, Rebecca, because we have just a couple minutes before I turn it over to the audience. But perhaps you could talk to us a little bit about inspection reports and what audit committees might be interested in.
Yeah, no, absolutely. So to risk repeating myself, it's the fact that we just issued our new inspections report, I think is important. And we've had some preliminary conversations with audit committees and asking about how it's been received. I think in previous years, the concern was a lot of our inspection reports had a lot of boilerplate language. We're obviously statutorily precluded from including some specific information and making it public, but what we try to do with the new framework and format is enhancing the disclosure as much as possible. And we've also, for the larger firms, providing some historical context, and by providing some of the inspection results for the previous 3 years. And I think as far as patterns that we continue to see at a higher level across the board, I noted this earlier, whereas continued deficiencies in the areas of the work with respect to estimates, as well as testing of internal controls. And so with respect to what we would suggest audit committees should know is those are still the areas for room of improvement. We'll see how their new requirements under the estimate standpoint address some of these. And the other thing that we would just point out is the fact that as many of you all know, is that part 2 of our inspection report is not public, but that's nothing precluding audit committees from asking their auditors about their inspection results with respect to their quality control systems. So some of the issues that we think in the part 1 findings, it's in my opinion, a little bit difficult to facilitate comparable data because an audit is, very dependent on the facts and circumstances of the company. And we don't control from across industries or the size of the firm and or the size of the company and whatnot. So comparable data is a little bit challenging. But if you look at what is a quality control criticism, it means that we think that there's a pattern of noncompliance. And so I would suggest that, audit committees would want to learn more about that. And in particular, how are the firms remediating or addressing those kind of criticisms?
Okay, great. I do have a couple of audience questions that have already come in, so I think I'm going to move to that part of the chat, the Q&A. Just want to remind the audience that if you do want to submit a question, certainly it's not too late. Go to slido.com and enter the session code 79724, and we will get your question in real time. Okay, so I'm going to start with Sagar, and of course, Sagar, Rebecca, if these are questions that you can answer, please feel free to do so. If it's something that you can't, given your positions, just also, of course, let me know, and we'll move on to the next question. But I'm going to start with you, Sagar. Sagar, we have a question from an audience member that says, and this may actually get us to talk a little bit about your engagement internationally. But it says, can you comment on the work the staff is doing to implement the recommendation of the President's Working Group with respect to China-based registrants?
Yeah, so we obviously have done a number of different public statements on China. We had a public roundtable. I think it's well documented, the issue. In fact, at the roundtable, Chairman Dunkey on one of the panels participated. And so Chairman Dunkey kind of outlined a lot of great perspectives and points on this issue. So I'd certainly encourage everybody to look at all of that now, and then I'll highlight a couple parts of obviously what's included in some of those public areas. So our chairman was a member of the Presidential Working Group and obviously submitted recommendations in respect to the issue. I think I would certainly encourage everybody to read the recommendations. I think there was a lot of thought put into them. And obviously, if you look at the different members of the Presidential Working Group, there covers so many different areas. There's a lot of very investor-centric people kind of thinking about this, and I think all of that thinking reflected itself in this document. So would certainly encourage you to have it. Treasury, the Fed, we're involved.
And then our chairman put out a statement with 4 or 5 different folks on our team. I was one person included on there. What our chair said was, obviously supportive of the recommendations, and that he's instructed us, the staff, to think about recommendations we can make to the commission on, how do we get these recommendations done. And so I think our chairman laid out a nice roadmap for what we, the staff, are doing, and of course, we are working hard and apace at doing that in what we think can be done in a very thoughtful way. And so I kind of look at all that. If you want kind of the latest on China, I think we've tried to be very transparent about what we're doing, but specifically on the PWG, I would specifically look at the report itself, and then I'd look at Chairman Klain's, and I guess it's the statement that he did shortly after that, and then of course we're following what's included in the statement.
Okay, great. Rebecca, for you from the audience. How are PCAOB reviews of audits selected, and how representative of Big Four and non-Big Four auditors are they, and how representative of companies are they?
Well, that's our secret sauce. No, I'm just kidding. Well, first, as the lawyer in me will note, the statute prescribes what are required to be inspected annually versus triannually. And so on an annual basis, it includes the global network firms as well as any auditing firm that engages in an audit of over 100 issuers. So those will get captured and inspected on an annual basis. We typically inspect anywhere from 160 to 190 firms in a given year, and we'll review around 700 audits, I think, if I'm remembering correctly. So it's pretty expansive. And then you have the triennial firms, which then get on an inspection cycle of every 3 years. And then as far as which audits are selected to be reviewed, it's done on a risk-based approach as well as a random sample. So I think, we strive to have a lot of, representation of what's in the market as well as the size. So to go across the spectrum.
Okay, perfect. Let's see, one more question is what we have time for. And Sagar, I think I will pivot to you. The question from the audience member states, besides the 3 major standards, which you mentioned from the FASB, can you comment on what is top of mind at the SEC and FASB going forward?
Sure. Yeah. So FASB, I think, as we talked about, has a very good agenda, and maybe a couple of things that I'm happy to highlight is they're making significant progress on liabilities equity. So they're making enhancements. This tends to be one of the most complicated, challenging areas. This is always, a very top area of restatement. It spans with the transactions are complicated themselves, right? When you go issue convertible debt, that might have a bunch of different features. Understanding that is hard, right? Or if you issue warrants and they can have different features. And then the accounting literature has evolved over many decades in terms of these types of transactions. So the accounting literature is complicated, and I think FASB is being very thoughtful in making improvements in this area where investors won't be harmed, of course, during the changes. And so that's one I'd certainly encourage folks to watch. Another one that's generated a lot of interest, which it's supposed to do because it's kind of early stages in the FASB seeking comment, is goodwill. And so, everybody writes a comment letter and they'll tell you why their view is the only way you can think about it. And it's good to go read those comment letters and so forth. And so it's a big issue. There's a lot of goodwill on balance sheets, right? And so FASB is certainly tackling a tough one. If you have a perspective, no doubt they're very much engaged and would want to hear. And then I think the other thing is just, so there's a couple things on their agenda on top of the 3. And then I think, as I mentioned, kind of the transition to Rich, they've got a new technical director in. So making sure that transition goes very well, which I think we're already off to a flyer for 3 months is kind of from our perspective is of course top of mind, making sure that that the board continues to execute the important mission that they have.
All right, thank you. So unfortunately, we're out of time for this portion of the summit, but thankfully for us and for our audience members, Rebecca and Sagar have agreed to join us for the main panel session. So we do have a couple more audience questions that we will not get to in this portion, but hang tight. Those of you that have submitted questions but have not had your questions posed, we will reserve those for the main panel session. You will definitely want to come back after the break and join Steve Cook, who is a partner at Paul Hastings. He is also a lecturer at UCI Paul Mirage, and as many of you know, a recurring moderator for our UCI Audit Committee Summit. Along with Sagar and Rebecca, we will have several prominent experts joining from both practice and industry. And so I ask that you do come back and join us for our very interactive main panel in about 5 or so minutes. So we will be back with more. Hang tight.
Good morning. My name is Steve Cook, and it's my honor to be moderating this morning's panel discussion. I'd like to thank Patricia, Sagar, and Rebecca for their insightful comments. Sagar and Rebecca are now going to be joined by 3 other additional preeminent panelists as we look through Audit Committee hot topics. Joining us this morning from Washington, D.C. is Christine Devine. Christine is a National Managing Partner for Quality, Risk, and Regulatory Matters at Deloitte & Touche. Christine leads Deloitte's National Practice and Professional Practice Network, where she currently leads a team of over 300 partners and professionals. Prior to joining Deloitte, Christine spent over 8 years with the SEC, including the last 4 years with the SEC as the Associate Chief Accountant in the division of the Office of Chief Accountant. In preparing our remarks for this panel and working with Christine, it's certainly easy for me to see why she routinely works on that firm's more complex accounting matters. Christine, thank you very much for joining us this morning.
Thank you, Steve. My pleasure.
I'm very pleased to also announce a new panelist this year, Brian Nickel. Brian is Chairman of the Board and Chief Executive Officer for Chipotle Mexican Grill, a New York Stock Exchange listed company. During Brian's tenure with that company, the company has been recognized as a leader in its industry. In addition, Brian himself has received numerous awards and accolades, including being listed as Fortune's Business Person of the Year in 2019, as well as Barron's World's Best CEOs in 2020. In addition to his numerous responsibilities at Chipotle, Brian serves as a director at Harley-Davidson, where, if I get it right, Brian, I think you said at all the committees except the Audit Committee. So we'll find out about that one.
That's right.
Brian, thank you so much for joining us, and we certainly look forward to your perspectives from the C-suite as well as the boardroom. Well, we're also very fortunate this morning to have our third panelist join us, new panelist joining us, and that's Eric Brandt, who's actually returning to our panel this year. Eric currently serves, and if I've got this right, Eric, 5 boards, including as chairman of the Audit Committee of Norton LifeLock, chairman of the Audit Committee of Lamb Research, chairman of the board of directors of Dentsply Sirona, a dental product supply company, as well as a director on a REIT and a privately held company. So we all know that Eric has extensive C-suite executive experience, and as always, we look forward to Eric's candor and insights. Eric, thank you for joining us this morning.
My pleasure.
A quick disclaimer for all of us on the panel. We'll get this over quickly. The disclaimers by Sagar and Rebecca continue to apply during this panel discussion. And in fact, the remarks expressed by all of our panelists are their own reviews and do not necessarily reflect the views of any of the organizations or firms which they're associated with, or the views of any of their colleagues of their respective organizations and firms. So hopefully we've covered the legal aspect now, and we can get into our discussion this morning. In the time that we have this morning, we're going to cover 3 main topics. We're first going to look at the agenda of the Audit Committee and how it's been impacted by COVID-19. We're then going to turn and look forward to the 2020 year-end audit and some crucial issues. And then finally, we're going to look at lessons learned, looking forward to what we might have learned from this whole process. Well, let's turn now to the agenda of the Audit Committee. Sagar, you noted in April and reaffirmed in June that the proper functioning of our capital markets depends on high-quality financial information that enables investors, lenders, and others to make informed decisions. And as you noted, we certainly do live in challenging times. And audit committees have quickly had to adapt to the new realities caused by COVID-19. So I'd like to take a step back and look at your joint statement that you issued back in December with SEC Chairman Jay Clayton and William Hinman, the Director of the Division of Corporate Finance. And this statement was on the role of audit committees in financial reporting, as well as some key reminders regarding their oversight responsibilities. Can you please share with us why you thought it was important to release this joint statement?
Yeah, of course, and it's terrific to be here with all the other panelists, so really looking forward to the discussion. If you take a step back, what we try to do in order to meet our objective, our task of trying to get the best quality information to investors is talk to different people within the ecosystem. I think the reason the U.S. system has so many strengths is there's so many different parts of the system, and we focus on each of the parts. And so hopefully that will give you some context on why we focused on audit committees, right? So obviously everybody knows that we talk to preparers frequently, why we have consultations. Perhaps some of you have done consultations. We're actively engaged with those folks. Obviously, the PCOB and us spend a lot of time with audit firms, and we have regular discussions, very helpful discussions, and discussions on that side. Obviously, internally, we spend a lot of time working amongst different divisions and offices. But one very key part of the ecosystem is the audit committee. Our chairman has said, and I 100% agree, and we put this in many statements, is one of the most cost-efficient, most substantive improvements from Sarbanes-Oxley was the enhanced role of audit committees. We take that very seriously. We think audit committees have significantly helped financial reporting. And so as part of our normal cadence, right, we talk to a whole host of people. We regularly talk to audit committees, whether it's through different panels or, audit committees will come, just call and we'll get to hear their perspective. The impact is huge. If you're working on 2 or 3, I guess 5 in this case, but whatever number of audit committee, or boards you're working on, think about the message, and that's different registrars, right? So if you talk to 70 people in the audit committee, I know there might be some duplicate numbers, and they're on 2 or 3, right? You can get to 140, maybe 200 companies and kind of your message. And so as we kind of thought about that, we thought it would be helpful, coming from the chair, coming from Division of Corporation Finance, and coming from OCA, to have a statement. We wanted to put out where people could apply it for year end, so we got it out in December. It was things that, new standards, CAMs, auditor independence, and a few other topics. We heard good discussion back from audit committees, from companies, from audit firms, saying they thought that was helpful for year end. It was something, I think, as we thought about the context of the system, made sense to do. And that's really a little bit of kind of the logic of why we did it and why we did it in December.
Thank you. That was very helpful. That helping to set the base. We all know that audit committees certainly are tasked with providing high quality financial information to investors, lenders, and other stakeholders. I'd now like to turn to Brian and Eric and get a perspective from the C-suite and the audit committee chairs. Brian, let me start with you. As you look at the interactions with the audit committee and the C-suite over the past 6 months, particularly as you've worked through all the challenges brought on by COVID-19, from your perspective as a CEO and a board chair, how have those interactions with your audit committee changed over the last 6 months in response to this event-driven disruption?
Yeah, well, thanks for the question, and thanks for having me be part of the panel here. Good to be here with everybody. And look, the first thing I would tell you is just the level of communication went up dramatically. And more importantly, I think it was really important to be very transparent on what was occurring in the business on a daily basis. In our industry, we were dealing with having to close restaurants, how we were going to invest in people, and then how that impacted, obviously, the liquidity of the company. So that was where the focus area was really on, was just the strength of the balance sheet, and then how we could then operate going forward, and then keeping, the gentleman that's our audit chair, Scott Mall, informed throughout it. So, it turned into, I had a weekly call with Scott, and we were dealing with it on a daily basis. And probably at the end of every day, I probably was trading some email with him just to keep him informed on what was going on. Fortunately for our company, we don't have any debt, and we had close to $1 billion of cash. So we were in a pretty good position. But even so, we were still game planning. If we need to close restaurants for a year, what's that look like? And then how do we invest in our people so that we don't have to lay off or furlough everybody? So that's where the conversations went. And fortunately, we had a great, capable person in the audit chair position, which, he was helpful to stay calm and stay focused. And, we trusted each other with the communication, and we trusted each other with what we needed to do for the business.
Eric, let me ask you the flip side of that coin. As perspective of an audit committee chair, how has it impacted your relationship with those companies? And then, are you asking different questions of management that you might not have asked 6 months ago?
So it's important to kind of roll the clock back and understand sort of how this sort of played out in the boardroom. I completely agree with Brian. First, it substantially increased communication. I would say initially, it's interesting, this elevated to the full board. This was not an audit committee issue, it was a full board issue. The first question was, the implications to the business and the safety of the employees. The second question that I think the full board had to deal with, which certainly was an audit committee issue, was what's the resiliency of the business? What does the forecast look like? How will the business perform, particularly in the period of time where things were closed? And then the follow-on question to that was really the capital and liquidity question that came up. What then followed was a conversation around business processes and making sure that the business processes were operating and could operate such that the company could close its books, such that you were sufficiently comfortable with the bandwidth capability of people working from home, which is much more of an audit committee question, and the cybersecurity questions. And then finally, and I've gone through 2 year-end audits that were off cycle in the midst of this, really a discussion around the observations, the proof points, the business processes to make sure that the closing process for the company and the ability to report accurate financials was done correctly. So there was a fair amount of communication, I would say, with the CFO and with the CIO as the audit chair in terms of getting comfortable with how the company was operating in a remote forum.
Thank you, Eric. Let's continue on in this conversation about that relationship and those interactions. In the classic article, What Makes Great Boards Great, the authors conclude that it's a virtuous cycle of respect, trust, and candor, or in other words, those social relationships that particularly exist between the CEO and the other directors that make boards successful. Eric, from your perspective as an audit committee chair, how do you maintain that cycle when times like these, when there's difficult issues that need to be addressed?
Well, look, I think it starts with a belief that as a director, you are more committed to the success of the company and the CEO than anything that's personally of interest to you. If you have that view and the CEO understands that view, then the ability to provide feedback is much easier to do, and it's done in the appropriate spirit. I think where motives are unclear and people aren't all rowing together, it becomes much more difficult to have the level of trust and candor necessary to provide the feedback and guidance sometimes, particularly in difficult times like this, where boards have to get closer and communications in some boards were weekly to every other week, and then they went to monthly. I mean, there's a point at which, you're providing too much help, and you've got to be able to be in a position where you understand and trust the management team, and the management team trusts the board, that they're aligned to try to make them succeed.
Brian, Eric raises a great question, which is that trust can be broken at any time, particularly among the key participants. And there's a lot of uncertainty for a lot of companies right now. What recommendations could you give CEOs and board chairs to make sure as they work with their audit committees, they maintain this cycle?
Well, I would go back to where I started, which is the communication and the transparency of the information. If you can have good discussions built on the actual facts of what's occurring in the business and what's occurring for your people or your culture. And as Eric mentions, if the board stays supportive on, the aspect of strategy and culture, then I think it maintains a productive relationship even in difficult times. And that's really where I spent my time with our board. And fortunately, that's where our board wanted to spend their time too, is understanding obviously the implication on people, the implication on culture, and then obviously the implication on the business. And we just made sure we had communication that way. And I set up kind of like a really simple dashboard where I could share the information on a weekly basis. To Eric's point, it became quickly something bigger than just an audit committee discussion. Even though some of these topics usually fall in the audit committee, it became an entire board discussion. So that was probably the hardest part, is how do you keep a full board informed versus, a few audit committee members. And, it just took time and more communication.
I appreciate the segue to the implications, because that's where we're going to go now in our questions. This past July, Rebecca, the PCOB reported on the results of its outreach to a number of audit committee chairs as to what they were thinking about with respect to the effects of COVID-19, on mandatory reporting and the impact on the audit committee's oversight responsibilities. Can you summarize for us some of the key themes and takeaways that emerged from the outreach, including the risks that were associated with remote work?
Yeah, no, absolutely. I'd be happy to. And some of the themes have actually already been touched upon by what some of my fellow panelists have described. But as I had discussed earlier in the fireside chat with Sagar and Patricia, was the fact that the PCOB really finds critically important our ongoing relationship and outreach with our stakeholders, and including audit committees and audit committee chairs. And so I think as we rolled into this global pandemic, we really wanted to make sure, not just with respect to the auditing firms themselves, but hearing directly from audit committees and their chairs of how are they all transitioning to the remote environment. Overall, we were pleased to hear that the move to remote was pretty seamlessly. The impact of COVID actually was, to state the obvious, dependent on the industry of the company. And also similarly with respect to the characteristics of the company, whether the internal controls or financial reporting had to change. But we did see some common themes of enhanced risk as a result of COVID-19 in a remote learning environment. And I think the first is the health and safety of employees. I think that's common across the board. And the second was cybersecurity. The other areas were going concern, accounting estimates, and impairments. And then with respect to cybersecurity, it was sort of a natural follow-on as we moved to the remote environment and employees are logging into the network, concerns over enhanced phishing exercises. But then if you sort of take a step back of what is the role of the auditor with respect to cybersecurity, it's obviously limited into if it has any kind of impact on a material misstatement over the financial reporting. But we also, in issuing the summary of our communications with the audit committees, was we identified some of the questions that audit committee chairs noted would be useful in conversations with their auditing firms, including whether there'd be an impact on their audit plans and if there would be any change that they would have to then follow up with the audit committees. So it's publicly available.
Thank you, Rebecca. Rebecca, you noted that cybersecurity risks were top of mind for many on the audit committee chairs. And so I'd like to pose this question to Eric, and I'd like to remind him of a statement that he made a few years ago in our program. Eric, you noted that there were two types of companies, those that had experienced a cybersecurity breach or risk and those that will. What kind of questions do you think audit committees should be asking management now about cybersecurity related risks, particularly with remote working?
So I suspect today there's only one category of company. And I might have even said last time that there were two kinds of companies, those who've been hacked and know it and those who've been hacked and don't know it. But I suspect that most people have been through this quite significantly since that time. Look, I think you have to have an up-to-date and robust assessment of the company's cybersecurity posture. And this can't be done quick. This can't be done for a little bit of money. We're talking about a meaningful view of not just perimeter capabilities, but the internal systems and all the things associated with the NIST framework. And then a real assessment of the maturity of the company as it relates to cybersecurity, such that it can continue to improve and know where the company needs to be relative to its peers and the nature of the underlying risk. And so while many people focus on financial risk, which is the ability for money to fraudulently leave the company, the greater risk in a lot of companies, particularly those with significant IP positions, is protection of IP. And understanding the engineering systems and the protection of IP and how that relates to beyond the financial systems becomes very important. But I would say from my perspective now, it's interesting, the CISO, the Chief Information Security Officer, is kind of like the head of internal audit. And for the boards that I'm on now, we hear regularly from the CISO on the status of cybersecurity initiatives, as well as the risks that have occurred over the course of the quarter in a dashboard format. So there has to be that level of regular communication. To go to the changes in the working environment, I think one of the reasons why we have found companies as productive and successful as they are is much of our work has been shifted to a computer, and a computer can be held in many different places. What people don't appreciate is the protection of their home networks vis-a-vis the protection of their work networks. And I think what companies have to understand, have to be able to do better, is to make sure that the systems that are being operated from home networks are equally protected. And this becomes an even greater issue if you're a small company and you're BYOD. Because if you're bringing your own device and you're a small company, then it's probably not loaded with all of the corporate spyware that you would find on a large company's set of devices. And I think for smaller companies, they have to be even more vigilant about who's got what machines are being used for what, and whether those machines are adequately protected.
Well, we're talking about risks of remote work. Brian, as a CEO, do you see any particular risks associated with remote work from your organizations?
Well, I mean, obviously, we've done everything we can from the cybersecurity standpoint. So that's like I would say the security risk. I think the greater risk, frankly, longer term, is on culture and people development. And fortunately, we're still getting the work done. And there's been no dropping of the ball that way. The thing I just worry about is longer term is how do you keep the culture and new people that come into your company during this time? How do you get them to be a part of the culture? How do you build the relationships? So in every business, there's the formal network of how you get things done, and then there's the informal network. And you need the culture and you need those relationships to get work done via that informal network. So, in the near term, it's working fine. Longer term, I do worry about, people development, new people to the organization, and how we sustain our culture and values working in this remote environment.
Well, one last question on remote risk, and I'd like to get Christine on this one. Christine, the Wall Street Journal ran an article just last week about auditors and some of the challenges of remote risk as they prepare for the year-end audit. How are the firms preparing for this challenge?
Thank you, Steve. I'll speak to the challenges, but first I do want to say we have fortunately been able to successfully execute high quality audits and reviews in the remote environment. And that's really due significantly to all the investments that we've made in technology and innovation. All the speakers have mentioned that. That's been a real game changer to be able to react to this remote environment. Another factor is the adaptability of our people. We have really tried hard to make our people agile, and they've definitely proven that in this environment. And then I want to say effective communication, which we've been talking about on this panel too. We talked about communication between the audit committee and management and the full board. That's very much true in our firm, and from me, actually, as a national office leader to our engagement teams, we have been providing lots of guidance, lots of helpful tools and resources so they are prepared. Certainly the health and safety of our people and our clients comes first, but I wanted to mention that when we think of virtual first, it doesn't mean only virtual. And so in some circumstances, we may do on-site procedures. Steve, you referred to the Wall Street Journal article, and in that article, it in fact did reference on-site inventory observations that Deloitte had attended. And right now, as we're getting ready for year end and we're planning, what we're doing is we're going through a very detailed analysis for each of our teams to think about execution of work. So it's what areas are we doing our procedures live versus what areas are virtual. And to address some of these challenges, what we're also doing is stressing professional skepticism was mentioned on the prior panel. That is key, and that's really critical for us. We do have a heightened focus on fraud risk because there could be new opportunities to commit fraud in this remote environment. We're revisiting our risk assessment. So you might have your auditors ask more questions this year, just really so that we can understand how the company is impacted and then how that would translate to an impact on our audit. And then lastly, I just want to mention from an audit evidence perspective, in general, we've been successful in designing alternative procedures to address the impact of remote working. Of course, it's harder because you can't any longer just stop by somebody's office to ask a question or to interact directly. So that gets back to the communication point where we're setting up recurring Zoom meetings and other type of meetings to effectively communicate. And we're using video conferencing for walkthroughs and other important discussions. So those are a few brief thoughts, Steve, on how we're addressing remote work.
Thank you, Christine. So I'd like to now turn to the June statement that was issued by the Office of Chief Accountant, where they highlighted the continued importance of high quality financial reporting for investors. Sagar, can you highlight for some of us those major points that you raised in that statement?
Yeah, no, of course. And really, I think that statement is part of an ongoing, I think, conversation we've had. Obviously, we issued a statement in April, and then obviously we did one in June, and all of that, was informed by significant outreach, significant discussions amongst all of our people with different folks. Obviously, our interactions with PCOB, with the FASB, all of that kind of informed these discussions. So as people were, getting close to Q2, we wanted to kind of put out, hey, here's the recent areas that we've stressed and focused on. So getting specific to kind of the topics that we covered, we had discussions on going concern. So obviously, for some companies, not an issue. Other companies, something to think about. The FASB wrote an accounting standard on it that folks had to follow, requires disclosure depending on your circumstances. And so, we stressed that. Of course, ICFR, we've long stressed pre-COVID, but wanted to kind of emphasize that area. So you'll see a healthy amount of discussion on that. We, of course, had areas of consultation. So that's been something both in Q1 and Q2 we wanted to focus on. What types of questions are we seeing? And really, it's a mixed bag, right? There's obviously asset impairment types of questions. And then there's kind of, quote unquote, the normal questions we're still getting, people are doing transactions. So we're getting business combination questions, financial instrument questions. And so we wanted to kind of lay that out for people. We also wanted to highlight how are we interacting with the FASB? What is the FASB working on? So you'll see in our statement we spend probably maybe some discussion on there. Same thing with the PCOB, what the PCOB is focused on, and wanted to support and emphasize things that Rebecca's mentioned that the PCOB has done, in kind of their piece. And then, of course, we had discussion on what was happening internationally. A lot of really important things were happening internationally. IOSCO issued a statement and so forth, and we wanted to highlight that. Of course, we were involved in that part. So, it's longstanding from OCA pre-COVID. We wanted to be engaged. It's not uncommon at all for us to do speeches and statements. We do it when we feel like there's a need in the system, and we want it to be helpful. We always try to think about the timing from a company's point of view, from an audit committee's point of view, give people plenty of time to digest and think through that. And obviously, the more discussions we can have to keep everybody current, we'll do. And then we'll obviously continue that as we kind of see fit and make sense. So that's at least a little bit of the thinking of timing and how, and then kind of why we picked, the topics that are included in there and so forth.
Certainly one of the issues highlighted was internal controls. Rebecca, internal control, but remote work may have potentially impacted internal controls over financial reporting. Can you help share with how you expect auditors should be considering these changes as they evaluate the design and effectiveness of internal controls?
Yeah, no, absolutely. So the internal lawyer then uses the opportunity to remind auditors that our standard with respect to evaluating the effectiveness of internal controls has not changed. But what we see the potential changes could have manifest in two ways, whether the company's ICFR changed itself as a response to moving to remote work, or as far as the ability for an auditor to evaluate those internal controls. As Christine noted, you can't just walk down the office and ask a question. And so what we expect, what would probably happen in light of this, is that auditing procedures that were previously relied upon in order to evaluate the internal controls over financial reporting would probably have to be modified and updated to reflect the current environment and obviously address any control changes that happened at the firm. And this is also an area where we had historically seen a lot of deficiencies in the auditing profession, is the testing of internal controls. And so it's something that will be of keen interest when our inspectors go in to do a review of the audit. And so I think it's an opportunity to make sure that the testing is robust. And as additionally, in just pointing out the obvious, is that if companies had to do any kind of modifications to the ICFR, it did happen in a rapid environment. And so it's something that we, again, stress the need for professional skepticism.
Good. So we're going to end our conversation on the agenda of the audit committee, but before we do, I'd like to ask Sagar one more question. Based upon what you and your staff have gleaned from reports, what advice can you give for issuers who might be preparing their third quarter reports and their disclosures?
Sure. No, I think having, kind of that year-end process, or if you're, I guess, calendar year Q3 process, the process that you've put in place, have those discussions, with your auditors, depending on what the issues are, have those discussions with audit committees. If there's obviously an area that, you found challenging that you think you'd want our perspectives on, obviously we've got a very vibrant consultation process on, and in that consultation process, we stress we want to know what the audit committee thinks. We want to know what the independent auditor thinks. What did it go through their national office and so forth. And so obviously our consultation process is open. You can call us as well. Everything doesn't have to be formal. We have an informal process where if there's something on your mind, we try to be helpful. We try not to have a barrier to communication. So if you have a situation like that, more than happy to have that. And then I think, we've emphasized disclosures, transparent disclosures, and continuing kind of that high quality information for investors, and of course are here. We've tried our part, as we mentioned in the last question, on the topics, and we'll continue to think through that. And like I said, from time to time, we take specific fact patterns. We'll post those so everybody can see, hey, here's what we objected to, here's what we didn't object to, here's the fact pattern and kind of the thought process. We'll of course give that consideration, and if it makes sense to do, we'll do. Obviously, we'll do that well in advance of a year end, so people will have time to think through that. So we'll do our part to try to be transparent. We want to be open, and then would encourage companies and auditors to keep doing what they're doing in terms of meeting the audit standards and providing high quality disclosure.
Thank you very much. On closing about the agenda of the audit committee, I'd just like to circle back to two cases that we talked about last year in this program. We talked about the Marchland and the Clovis oncology cases. In both cases, these were Delaware courts that denied motions to dismiss demands based on the importance of the board's oversight responsibilities, particularly when dealing with critical company risks. Audit committees ought to be aware that there's a third case that came along the same lines this year, the Hughes case, which involved the lack of inattention by an audit committee. And while certainly check with your company counsel about a particular situation, there are ways that audit committees can demonstrate that they are in fact keeping up with their obligations and underscoring the importance of oversight, including making sure that meeting agendas and materials and documents all memorialize careful consideration and discussions about critical risks, following up with the remediation of material weaknesses on internal controls or any other financial irregularities, insisting on transparency with the CFO, management, and others, as well as other steps. Clearly, forming the agenda for the audit committee is one way that audit committees can definitely demonstrate oversight that they need to. With that in mind, let's move and look forward to our 2020 year-end audit. Certainly, COVID-19 will present some unique challenges for auditors and issuers alike. And as we look closer to year end, what we'd like to reaffirm, though, is that investors need high quality financial reporting to make informed decisions. But if we've learned anything over the last 6 months, I think we've learned that historical experience is not likely to be representative of current and future environment. So this leads us to the leadoff topic under this discussion, which is key accounting estimates and assumptions and questions. Eric, I'd like to turn to you. As a chair of the audit committee, what questions should the management be asking? What questions should the audit committee be asking management with respect to updating forecasts and key assumptions and sensitivity analysis?
Yeah, well, I think it depends on sort of where you come from. For me, I believe that a forecast is wrong before the ink dried on the paper. Okay, because it's a forecast. It's a projection of the future, and it's the best estimate you can provide. I think what audit committees need to understand is when fundamental change is being made to the business, and what the assumption as it relates to where we are now and where it's going in the future is. And so what I would say is many a forecast is based on reasonable assumptions. When you multiply them together, produce unreasonable results. And there's no substitute for business judgment on the part of senior management and on the part of board members to understand that. And the real question I think boards have to start asking when they see forecasts is, how wrong can I be? Or how wrong can you be in your forecast? And what is the basis of where those beliefs are? Because you're relying on the capability of people who are closest to the business, and you should trust them to be close to the business. But as things change materially, you want to understand the underlying fundamental assumption changes that exist in a business and whether they are in fact temporary and maybe the product of an impairment analysis because the first year looks bad and changes the cushion on the impairment and what that means versus what a long-term view of the business is in a particular situation, which should, maybe over a longer period of time, pass and return things back to normal.
That's a great point, Eric. Sagar, let me turn it to you then. What are the OCA's current views about accounting judgments and estimates, as well as the disclosure obligations of issuers?
Yeah, so we've talked both pre-COVID, after COVID, kind of about judgments. We've one of the reasons why we like to have consultations posted is people can see, okay, did we accept a judgment, did we not, and people can kind of see that. A lot of our consultations, I think, there's so many people involved. I think, really the proof is in the pudding and how we've answered questions and the interactions we've had on consultations and so forth. But in terms of judgments, as you'll note, kind of in both the Q1 statement and the Q2 statement, I'll call them Q1 and Q2 statements. And then prior to that, we've long respected well-reasoned judgments. And so, what that requires companies to do is go through their full process, make sure they understand all the facts, make sure that they're understanding all the accounting consequences, think about all the accounting alternatives, apply the accounting literature, and then that lands you at a place, right? It's a very long, detailed, rigorous process, and we've long accepted well-reasoned judgments, and we'll continue to do that. I think that's been something that the SEC's long ascribed to do, and so everybody kind of says that, but really for us, I think is kind of the consultation process is where we get the questions, right? We get so many questions a year on accounting side, on audit, auditor independence consultations, and I think kind of showing that is kind of how we've done that. So we've intentionally, significantly, or we've intentionally always kind of talked about this, and as you can see, it's certainly included in those. We have lots of discussions with registrants on their fact patterns, and certainly if there's a tough one people are dealing with, come talk to us. We're more than happy to engage and so forth. And so obviously every company has their own situation, and things can get very complicated, and so it's a challenging question, but from a process point of view and how we've thought about it, that's OCA's lens on the question.
Thank you. Hey, Rebecca, I'd like to ask you about professional skepticism. You mentioned it in your fireside discussion a little bit. Do you think audit committees ought to be expecting auditors to change their audit procedures to address, potential bias, if there is going to be intentional or unintentional, so when they form these estimates?
So I was getting off mute, but short answer is yes. So the requirement for auditors to engage or exercise professional care and skepticism applies to all aspects of the audit. But when you look at the unique characteristics of estimates, we see that there's probably going to be a need for the audit procedures and risk assessments that auditors previously relied upon to change in light of COVID-19. Given the economic volatility, we think that there would probably be an impact to some of the underlying assumptions that management uses in order to determine estimates. And then as we previously discussed also, is the fact that our standard with respect to estimates is actually changing and going effective for year-end audits of December 15th. So associatedly, we'd expect that the audit work around that would change as well.
Well, thank you. I know Christine will be joining us in a minute. So estimates and judgments and assumptions leads us to the issue of critical audit matters. So let's consider what we think the CAMS disclosures will be headed this year, particularly in light of COVID-19. Rebecca, the PCAOB made the observation that while COVID-19 itself is not a CAM, the crisis might influence auditors' determination of CAMs. And you touched on this before in your fireside chat, but can you actually give us some examples of areas where you see CAMs referencing COVID-19?
Yeah, so as I indicated earlier, was that our Office of Economic Risk Analysis is actually undertaking an evaluation of or a review for the effectiveness of CAMs. And so we're actually tracking all of the audit reports that have been filed to date since the outbreak of COVID-19. And I think our data is as early as early September, we have 160 some odd reports that specifically reference COVID-19. And of there's a subset of around 45 that you have CAM disclosures that also reference COVID-19. So we see sort of anecdotally the fact that auditors are using the opportunity to provide enhanced disclosure because of this. And the CAMs that address COVID-19 aren't going to come as a surprise. It's going to be related to going concern, goodwill impairment, the valuation of certain assets, including inventory, and also probability of default and calculating expected loan losses. So again, I don't think any of those come as a surprise, but I do think that it does reflect the fact that auditors are using the new disclosure and tying it to COVID-19 as potentially being useful for investors.
Okay. Hey, Christine, what questions do you think audit committees ought to be asking now of their auditors with respect to CAMs and COVID-19?
Sure. First, before I even go through the questions that audit committees should be asking, I think one of the most important things is for audit committees to engage early and often with auditors on potential CAMs. So start discussing them now. And this really showed itself well in our pilot programs, because that was done in the year prior to implementation. And I think it helped to eliminate surprises by engaging so early. And then turning then directly to the questions, I think one question would be, how are the impacts of COVID-19 considered for each of the CAMs? Another question might be, were there any close calls that were ultimately determined not to be CAMs? And if so, how was the CAMs considered? How was COVID-19 considered in that assessment? And then a final question might be, are the CAMs similar or different from your competitors in your industry?
Thank you. Rebecca, you mentioned that the PCAOB is actually undergoing a review of CAMs and the disclosures for their usefulness. I'm not sure, but I'll ask Brian or Eric if either one of them want to weigh in here on how they view the effectiveness or the helpfulness is of CAM disclosures right now in terms of meaningful information for investors.
You want me to do it, Brian, or you want to do it?
Yeah, go ahead, Eric. Go ahead.
Look, I think it was a good idea. I don't think it's adding the value that people had hoped it would add. To me, when I read a CAM, and I'm a professional financial statement reader, right? I read 5 a quarter, right? Or I read 3 a quarter, depending on where we are. And I read every 10K cover to cover. And so I don't know that it tells me much different than critical accounting policies. And I think, although I wasn't part of this, my suspicion was that you were trying to get to a point where you could help the reader of the document, the investor, understand the challenging things that were discussed in the audit committee over the course of the year. It's very hard to characterize that. because of the nature of the conversation and how the conversation occurred and how long it would take in a document that's already 120 pages long, which most people can't understand. And so I'm not sure. I was probably a little bit more concerned about it when it first was introduced. How it's played out has been a little bit more consistent with critical accounting policies and less of an issue. I think the place which has been interesting in conversations in the audit committees on it is when you see the CAMs, whether you can actually recall the discussions that occurred in the audit committee as an audit committee member. Because sometimes the CAMs reflect conversations with management and not with the audit committee. And the conversation I've had with the auditors is, wow, this one's new to me. When did we discuss this? And I think understanding what's discussed with management and discussed with the audit committee, or if it's going to show up in a CAM, it should have been discussed in the audit committee. So there's a process issue for me, but I'm not sure it's added the value I think that Andy when it started, because it's very hard to characterize a series of back and forth complex conversations on a number of accounting issues that occur in an audit committee.
So Rebecca, you've got another data point there for your review. We can't talk about the year-end audit without touching on going concern and liquidity. Certainly some businesses have been increasing doubts about their ability to continue as a going concern. And Sagar, I'd like to have you help us kick off this discussion. You noted in June that preparers, each time they prepare a report, including during the interim periods, that management needed to consider all the relevant conditions and events, which raised substantial doubt about their ability to meet the obligations as they come due within 1 year after the issuance of the financial statements. What perspectives can you share with us here as issuers work through these considerations?
Yeah, we wanted to. I think again, I think we thought it was a worthwhile topic. Obviously, we've covered many topics in the course of our different statements and so forth. As I mentioned, FASB has been, we think a good standard. It's got, depending on your situation and kind of your facts, it's got very important disclosures for investors to know about, and so. Again, it's not applicable, but to those who are, there's a decision tree basically you have to go through in the standard, and what we wanted to emphasize was you have to do that obviously to be compliant with GAAP, and then the disclosures we found very meaningful, and obviously FASB thought hard about those disclosures, and so in the context of dealing with many issues, we thought it was a worthwhile issue to highlight and remind people of the existing accounting rules, and by and large, I think people are going through those and kind of making the assessments and so forth. So that's at least kind of how it fits in the context. But certainly, for some companies that are going through that, very important information we want investors to have.
Talking about the accounting standards, Rebecca, the PCAOB accounting standard deals with the consideration of when an entity's ability to continue as a going concern. What type of conditions and events are you thinking the auditors ought to be considering?
Well, I'll speak to the auditing standard. I'll let Sagar speak to the accounting standard.
Sorry about that. Okay.
Well, we are called the Public Company Accounting Oversight Board. I never understood that. But all kidding aside, just this is where the lawyer in me also says, well, our auditing standard with respect to going concern has not changed, but obviously the environment and the work associated to comply with our standard has probably changed dramatically from previous years. So if you look at what auditors were experiencing last year and probably evaluating a going concern or substantial doubt in the retail sector, it's light and day from last year versus today. We're seeing a number of bankruptcy in the sector. And so that means that we think that the work that an auditor has to undertake to comply with the standard should probably be, far more robust. Obviously, given it depends on the facts and circumstances of the underlying company and all those caveats aside. But some of the conditions that, we would think about at the PCAOB that might trigger concerns over substantial doubt or not, there's nothing surprising here. It'd be certain negative trends, ongoing negative cash flows, negative operating losses, defaulting in loans, or having your access to credit through your suppliers being cut off, or just in general, access to credit or capital being shut off and not being able to find alternative means. And so if some of those conditions or events were identified by the auditor, we'd expect, again, professional skepticism and a lot of evaluation, and especially in particular in response to how management thinks that they would be dealing with that financial distress. And so in management's response to that, we would expect the auditors to look at it with a really critical eye, and so that they can actually fairly evaluate the going concern.
Well, Christine, speaking of auditors, let's turn to you. That's a great setup, by the way. Thank you, Rebecca. As you look forward to the year-end audit, help us, or can you explain to us what kind of information you think management ought to be considering as it evaluates the going concern question?
Sure, and Rebecca did a really good job, I think, of going over a lot of that. So I'll try not to be redundant, but under GAAP, similarly, your management's going to consider negative financial trends and indications of possible financial difficulties, internal matters like work stoppages, substantial dependency on a particular project, maybe that's in jeopardy. Other external matters as well, like legal proceedings that might jeopardize the company's ability to operate, loss of a customer. So similar factors as to what Rebecca went through. And then for a company to be able to alleviate substantial doubt, they may be able to do that if it's probable that management's plans will be effectively implemented. And then when they're implemented, that they'll mitigate the conditions that are raising the substantial doubt. And that would have to be for at least 1 year from the issuance date of the financial statements. So that's what management would have to consider. And then also in terms of disclosure, companies will want to provide comprehensive disclosure. That would be both in the annual financial statements as well as the interim financial statements. And that's, of course, when there's a substantial doubt about the ability to be a going concern. And what you would think about for the disclosures would be what the principal conditions or events are that raise the substantial doubt. Also, what's management's evaluation of the significance of these conditions or events, and what are their plans to address the conditions of the events.
Thank you, Christine. Eric, this issue always seems to run into a last-minute snag, at least in my experience for some companies. What questions do you feel like audit committees ought to be asking of management right now to make sure that they're focused on the right issues and the right topics that minimize the risk of any last-minute snags or complications?
Well, I think at the crux of the issue is economics, right? Sometimes we get caught up in accounting, and this is really about economics and how economics work in accounting and disclosure. And I think audit committees, there's no substitute for audit committees understanding the business and understanding the resiliency of the business. I'm on 4 public boards, 2 public boards for this. It had the COVID issue had virtually no impact. The business is performing fine. In fact, in one case, the business was performing better because it's Norton LifeLock and it's cybersecurity. So everybody was buying cybersecurity for their home. And in some cases, like a mall company where your malls get shut down in the midst of the crisis, understanding the resiliency and the collections and the capital structure of the company. And I think companies have got caught up, and I appreciate Brian's comment about not having debt. Companies got caught up in investors telling them they had lazy balance sheets. And so what they did was they took on debt, they bought back stock, and they optimized their balance sheet. And they didn't think that this was going to happen. And I'll share a quick story. When the terrible Japanese tsunami occurred, we were having a conversation when I was an active executive. And I said, well, gee, our business continuity processes and enterprise risk management, we should have thought about this. And somebody looked at me and said, let me see if I got this right. An earthquake, followed by a tsunami, followed by a nuclear meltdown. How do you put that into your enterprise risk management processes? And the answer to that is, don't put that in your enterprise risk processes, but you put in some sort of shutdown or some sort of pandemic or whatever the case may be to understand the resiliency of your business and whether you have sufficient cash to get through what Christine says is your going concern issues around 12 months. And I think for a couple of companies, access to capital became very important and very quick, and for others not. And so understanding the underlying economics of where you are and what really changed in your business, both as it relates to going concern and as it relates to write-offs, become very important as you move forward.
Thank you. Thank you very much, Eric. Does anybody else have anything to add to this issue about going concern and liquidity before we move on from our panelists? I want to encourage all of our audience to present questions for Slido. We have a lot of questions which we are going to address as a panel, and I'm looking forward to them. But before we do that, I want to make sure we leave plenty of time for our panelists to talk about lessons learned as we look forward. Certainly issuers, auditors, and audit committees, and I would dare say the SEC and the PCOB in this, have all had to adapt and learn from this pandemic. And I've asked each of our panelists to take a step back and share with us what is it that they feel like we have learned the last 6 months or so that you predict will have a permanent and long-lasting impact on audit committees and issuers after the pandemic diminishes. So I'll let any one of you go first, and let's make sure we leave plenty of time for this discussion about things we've learned. Who would like to choose first?
I'll start. So I would say a couple big things right off the bat. One, and I'll probably use that resiliency term that I think Eric just brought up, is testing. You can't predict what the next big unexpected event is, but to really understand the resiliency of your business is something that I think now is at the forefront of everybody. I think it's interesting now, it's in vogue to have a fortress balance sheet versus 6 months ago. I got a lot of calls from investment bankers asking me why don't we have more debt or why don't we have debt, and now all of a sudden we're being looked at as a way to be prepared in our industry. So I think resiliency is a big piece of the puzzle. The other thing too is I think how in touch and the communication that you need to have with your organization. Our company's 100,000 employees roughly. We have restaurants everywhere. And I think one of the things that we learned is, the more clarity of communication, the better. And I also think we really discovered how important our company values were, because the decisions that we were making were very easy for us to make because we did them consistent with the values and the culture that we had. So, we got tested on, how real were those values? How real was the culture that we were creating? Because obviously we wanted to do the right thing for our people. And then obviously those customers that we serve. So I think the resiliency of your culture, the resiliency of your leaders, and then frankly, the resiliency of the actual business are all big things we learned. The obvious thing I would mention too is we also learned that we had places where we had let bureaucracy get in the way of making decisions. And one of the things that is positive about a crisis is you realize there are a lot of, I would say, gates or hurdles that we were putting in place that turned out to be not all that necessary to be able to make good decisions. And, we saw that firsthand with all the pivoting to digital. I heard an interesting comment just the other day, now when you go to hotels, a year ago, you weren't sure whether or not you could do mobile check-in. And it was a thing that was coming in the future. Now it's like you go to a hotel, everybody had mobile check-in. All of a sudden things that were going to take years to do got done in a matter of months. And I think that's just a testament to sometimes we get in the way of ourselves. And one of the challenges I put back to our organization is how do we make sure that we continue to have access to the right information at the right time so we can make decisions faster and then move on and learn from those decisions. So, I think we've learned how to be faster to market as well through all of this, and then do it in a way that is very much consistent with our company purpose, our company values, our company culture. So, I would say those are some of the big learnings for us over the course of these last couple months.
Brian, thank you very much. It's obvious why you've been selected to receive the awards and recognition that you have as a CEO. So thank you. Who would like to go next?
I'm sorry, go ahead. No, go ahead.
I'm going to have to choose on somebody, I feel like. So Christine, go ahead, please.
Okay. First of all, I think that was incredibly well said. So maybe just to add to that, certainly I think talent and what we've learned is the demand for employees that are adaptable, agile, and flexible is going to continue for issuers. And that's just going to be key to navigating these types of issues. I know one thing we've focused on quite a bit is our crisis management program, and making sure that is robust and comprehensive, which in our case it was. We had a very developed crisis management program that we relied on. And so I think that's something that's going to be here to stay, and companies are going to critically focus on. So those are just a few thoughts to add.
Thank you, Christine. I'll leave it to Sagar, you want to go next, or Rebecca, or Eric?
I'm happy to go unless one of my colleagues wants to go. Anything's fine with me.
Go ahead.
Okay. So yeah, I'm really proud of kind of the SEC, and obviously there's been a lot of change. And so we historically we're very much of a culture of coming in to the office, OCA in particular. Right? I'd say a lot of people came in every day, and you work together as a team. Obviously, in March, April, when everybody started working remotely, we had to shift. Our IT, from an SEC point of view, has held up amazingly. We've been able to interact internally, at a terrific level. There's been a focus internally on the well-being of our people, both physical and mental, that I'm grateful that our chair has emphasized so much, and that we've obviously, as different division office heads, have tried to really message. I have zero doubt about our ability, both the SEC and OCA, to effectively meet our mission. If anything, I would continuously emphasize well-being and making sure people are handling the challenges and so forth, and we continue to work very hard on the mission. So I think now, knowing all the tools we have from a remote perspective, all the engagement we've still been able to do, all the interactions we've been able to do externally, the communication we've had externally, the communications we have internally, all the relationships that have gone through, things just didn't fall off, right? I mean, projects that we've been working on very, very, very diligently, whether it's domestic or international, all that kept going, which I think is just an emphasis on the importance of what we're all doing. And so having those different tools and the different ways you can do it will only make both the SEC and OCA stronger as we come out of it. And so I think I share, kind of what my other panelists have said in terms of their own organizations, in terms of, being resilient, being agile, being able to meet your mission. And then now, once you've done that, you've got, kind of the ability to see, okay, when quote unquote, we're in a normalized environment, how do you kind of pick and choose to meet, your respective organization's mission the most effectively?
Sagar, thank you. Rebecca, how about you?
Well, not much more to add other than it worked out pretty well that one of the first things that we rolled out in our strategic plan was the fact that we didn't have a CISO or an enterprise risk management program. So thankfully that had been in existence for a little bit of time before the outbreak of COVID-19, and then we were obviously able to rely upon it. And the two, things that I'd highlight that became of critical importance for the ongoing operations of the PCOB, I think, are what you'll see in other areas. Because we're an organization of around 1,000 people or a little thereunder, but geographically dispersed across the country, and we went to 100% remote operating. But we, as Sagar has with the SEC, we have a statutory mandate, and we have to fulfill that mandate. And so by wanting to ensure the safety and health of our employees, we still wanted to meet our statutory obligations and to promote audit quality. And so thankfully, with the, having the risk management in place and the technology that had started to be rolled out, again, as a result of our strategic plan, we were able to get everybody all of the supplies that they needed to operate. And then constant communication at the board level, and then especially in the beginning, daily and then weekly updates with all the division and office directors, ongoing board meetings, and then communicating out to the staff on a very regular basis. I think one of the positives that we actually experienced was that far more direct communication from the board directly to staff than previously would happen. So I hope and expect that would continue in the post-COVID environment.
Very good. Eric?
Okay, so look, I think that what's unique about all of this is it gave boards the ability to have a window into the company. For many boards, you don't have. Companies that are well run have pretty routine processes and pretty capable management teams, and you follow kind of a pretty rote approach as a board. What the crisis did was it enabled the board to really understand this comment that the process is the product. And what I mean by that is, I talked about business continuity and enterprise risk management, and I think everybody understands that they're real. But the truth of the matter is the process of enterprise risk management and business continuity is you can't predict specifically what happens. But what you really do need is a management team that can coalesce, has a set of values that are aligned, and can manage the process effectively in real time, both as it relates to the employees and communicating to the employees and the customers, et cetera, and communicating to the board. Look, business is going to change. There's no question. Brian is absolutely right. Things have accelerated. I think the future has accelerated 6 months. It might have accelerated 18 months for many businesses. And the real question about that is, what does that mean to the structure of the business and how we're going to manage the business going forward? Do we need as many people? Do we need as many gates? Do we need as many people on site? Can we operate the business off-site? What are the cultural and mental health issues of running a business as we've been running businesses now? I mean, I think initially everybody was kind of happy that they were at home. Now people are not happy that they're home because there's no line between where business is. I think for boards, understanding how the company is thinking about those things, what changes could be on the horizon, encouraging the company to think about those changes. And then as it relates to ERM and BCP, what is the resiliency of the business processes? What actually changed in the business processes? Did they work? Didn't they work? What actually happened when you did the close? Were there issues? Weren't there issues? What issues did you expect? What issues didn't you expect? I think we'll all be better, and I think there will be a generation of management teams and then subsequently board members who will be far better at doing their job, both in a direct way when crisis hits and in an indirect way when things are going well, to understand how the company is operating. I think there are actually some positive things that came out of this, both for all businesses in terms of how they operate themselves.
Well, thanks to all of our panelists for those insights. We'd now like to turn the program to that portion where we're going to respond to audience questions. So if you have questions, please submit them via Slido with the code that's been given. But I noticed that we had a couple of questions come in about ESG, which certainly has been in the news lately. Sagar, let's turn to you. Where is the Office of Chief Accountant in terms of any agenda items or reviewing ESG disclosures, and what can we expect in the near term or even looking out in the future?
Yeah, so obviously kind of ESG is much broader than OCA. It's very much of a commission, decision and commission point of view. And so, and obviously, it impacts different pieces. It impacts OCA, it impacts CorpFin, just to name, a couple. And so, we try to be very transparent from a commission point of view in terms of perspectives. Obviously, we engage with investors. We want to understand what investors think. And obviously people have shared, different perspectives, on sustainability with us. Our director, Bill Hinman, who leads our CorpFin division, he gave a very thoughtful speech, kind of on principle-based disclosures, specifically talking about ESG. I certainly would ask that people look, and I think that kind of gives the CorpFin perspective of disclosure. And then our chairman has given, has spoken about this, has given, several different statements on it. Would certainly encourage you to kind of look at his statements. I think, in totality, I think the commission has tried to be, has tried to articulate a point of view of where we're at on that. And so, obviously, we're always listening, we're always engaging, but I think those pieces, the chairman's direct comments, and then I think Bill's speech is certainly where I'd look to in terms of the commission-wide policy, and people can read those and obviously, have kind of the latest information on that.
Thank you. Christine, there's a follow-up question when it comes to ESG, and the question is, what do you expect to be the impact on the profession, accounting and auditing profession going forward?
Well, thank you, Steve. And that's actually a question we've been getting quite frequently. And the twist on the question that we've been getting frequently is, are we seeing our clients ask for some kind of attestation work around ESG? And we are seeing an increased appetite and an increased requests about that. So I do think that's top of mind for companies, but it's not substantially done now. So that would be, forward looking if investors were to want that. And certainly the vast majority of large companies already do separate sustainability reports, but we're seeing questions from our clients about, should those disclosures from those sustainability reports find its way into the 10K, whether it's MD&A or business or another section, and then how will auditors be associated with that information? So a very timely topic, Steve.
Thanks, Christine. The next question I'd like to involve Brian and Erica. We've received a question from an audience member asking about, is the audit committee reviewing the insurance policy renewals, particularly this year, and particularly in light of cyber coverage levels? So I don't know if Brian or Erica, which one of you'd like to take that first, but I'd be interested in both of your perspectives.
Brian, why don't you go?
Sorry, Brian, we can't hear you.
Yeah, sorry. Yeah. So yeah, it's part of our kind of ongoing process to always be evaluating the insurance policies. Obviously, given the events, it's made us take a look at it with a different light. So it's in process. The cybersecurity thing has been something that's been ongoing because unfortunately, the bad actors in that are always changing. And our gentleman that handles all of our cybersecurity, I feel like every quarter, there's something new that we're dealing with. And as the folks that defend against it step up, unfortunately, the bad guys figure out how to work around whatever we've stepped up. So that's an ongoing exercise as well. And, obviously, the COVID approach made us relook at how our insurance policies work in these unforeseen situations. So it's an ongoing process right now. I don't have definitive outcomes. I don't know if you guys have had any definitive outcomes on this yet, but we're in process.
I would say it's been discussed at least in 3 of the boards. Insurance has become a big issue because insurance is rising. Certainly if you're looking at things like D&O, the market's gone up 30-40%. So insurance has become a bigger deal, and cyber insurance has become a more interesting topic because people are trying to really understand what's covered. Because when you dig into cyber insurance, there's a lot that's not covered. And so understanding what's covered and what the value you're getting and how much business continuity you actually can get out of a policy. Because if you're really saying that someone's going to take your company down for a day, a week, a month, you're not going to, you probably for a large company, not going to get enough insurance for that. You may get enough insurance to actually fix it, but you're not going to get enough insurance to cover the business loss. And then you have business continuity insurance and some other things. So it's definitely a topic in the boards, trying to understand what we're really covered for and why the rates are changing so substantially.
The only other thing I'd add to that is one of the things that makes for a weird dilemma in that cybersecurity thing too is you end up becoming accountable and liable, even though, the analogy I always use is like, a bank robber robs the bank, you're accountable for the fact that the robbers were able to rob the bank, despite whatever security measures you put in place. So it creates an interesting dilemma on the litigation associated with it as well. So that's the other thing I'd throw out there that makes it, to Eric's point, an interesting topic that is always discussed.
Yeah, absolutely. So we have time for one or two more questions. So again, if the audience would like to submit some more, we'll take a quick look. But I've got one for Christine. And Christine, as an outside auditor, I'd like your views on how would you recommend audit committees evaluate the performance of their auditors this year, particularly given how unique it's been?
Good question, Steve. So I think they need to, first of all, actually, I want to refer you to a CAQ resource that deals with that. So there's a very good tool that goes through a list of questions that audit committees might want to consider to evaluate their auditors. It has buckets for them. So I remember audit quality certainly is one, and then engagement team performance is another one. That's mentioned in there. So good resource, but particularly for this year, I think audit committees will want to understand how well the audit team understands the impacts of COVID on that engagement. So for that particular client in that industry, do you feel your auditors have a good understanding of the impacts of COVID? And have they explained to you how their audit procedures have to be modified as a result of those changes, including discussions with you about the impacts on the company's internal controls, potential changes or modifications to the internal controls from COVID. So really thinking this year about that, how is the auditor's risk assessment changed? And other ways to evaluate them would be the communications with you. And generally, we've seen increased communications, as we've talked about, as well as the timeliness of those communications.
Thank you. Rebecca, I don't know if you have anything else to add to that.
I think Christine covered it really well. So.
That's great. That's great. So one last question, because I think, Christine, you did talk about internal controls and changes. Eric, what questions are audit committees asking now about their internal audit teams to make sure that they're functioning properly and they're staying current with all of the changes that have been brought about by COVID-19?
Well, I think the audit teams are pretty close to the close-related changes that are going on in the business processes. But I will tell you that my observation is there aren't a lot of changes. Again, the ERP system has been in place for a long time. People have been interacting electronically. A lot of that's populated electronically and not specific to individuals. I think the real question is internal audit aware and watching the review processes, which now have to occur virtually, to make sure that they're actually robust the same way they were before, as well as the forecasting processes. So I actually think we're in pretty good shape. I think the challenging thing for internal audit and to a firm, right, is the no travel. And so if you have an international business and you want to monitor your international operations, it's very challenging to figure out how to run an internal audit process in India right now or Brazil. And I think audit committees have to be aware of that and make sure that there is at least some remote understanding of how those things are working and that they are right at the front of the list when things open up and people can go. But that's really the challenge, I think, the real challenge here.
Well, thank you very much. Well, I notice we're almost out of time. I don't know if any of our panelists have any last minute observations they'd like to share before we wrap up. If not, let me just first of all say thank you very much to all of you. Sega and Rebecca, it's certainly been our pleasure to have you join us from Washington and participate in the fireside chat as well as stick around for the panel. Christine, thank you for your insights. We really certainly appreciate you joining us as well from Washington. And then Brian and Eric, of course, from the company perspective, your guidance and insights were invaluable. I'd like to thank all of our panelists, and of course, I'd like to thank all of our audience members as well for being part of this program. UCI and all of our sponsors are pleased to have brought you this year's Audit Committee Summit, and we invite all of you to join us again next year. We are also honored as a group and to be supporting audit committees and the very important work that they perform. I hope all of you join us next year for our program, and thank you very much for attending.